Hey, what's going on, everyone? This is Tyler Coates, joined by my two favorite co-hosts, Mr. Fibbo Swanee, aka Brian Swan, and Joe Saz, aka Joe. And pleasure
AKA Joe.
it's a pleasure to be here with you guys as always, and thanks everybody for tuning in. It's always a pleasure to see some familiar faces in the chat. I'm sure we'll have plenty to talk about this week as the price action has been rather choppy since our last show, which can definitely present some difficulties for someone like myself and perhaps Fibbo, who is more trying to get in for the longer term swings or just like the more monthly type of swings where the weekly chop will really put us in danger of getting stopped out, or at least I guess I'm speaking for myself. I'm definitely looking at some stop losses being triggered and now looking at a potential opportunity to re-enter now that we have kind of made a head fake down and a move back above, and that's where it starts to definitely get worrisome about getting chopped in and out, but that's when just taking the signals and executing is more important than anything else. So I will be happy to share what I've been doing, what I've been seeing, and before diving into that, have one thing that I wanted to share with everyone. I think I briefly mentioned it last week, and I am pulling that up right now. One second. Okay. And sharing my screen. So the thing that has the recent development that I am most excited about in the crypto space is Kraken Financial getting a banking license in the state of Wyoming. So it's the first crypto bank in America, and they are planning on making their services available to the rest of the world as soon as possible. And that is the type of thing that I think can be a real game changer, specifically because they are required by law to maintain 100% of assets on deposit. Essentially, they're going to be the only bank in the entire world that isn't a fractional reserve bank. And from what I'm seeing and hearing, it looks like they're going to be offering much more interest on deposits for not only crypto, but also USD. So this is something that I really think could really show the world the difference in the value propositions of sound money and of crypto versus the value propositions of fiat. And that is what can really help, I think, people to sink their teeth into what's going on here when you are able to offer something that is so much different than the rest of the free market. It will make, I think, a lot of people sit up in their seats and pay attention. So this is something that I am extremely excited about myself, and I'm going to be talking about it a lot, I assume. So for anybody that's interested to learn more, here's just a blog post to explain the details of that. And there's going to be retail banking services. I'm going to be moving my bank over there for sure, debit cards and checking accounts and all that sort of stuff. And then there is also an affiliate link if you are wanting to support the show, that is included down there as well. But mostly I'm just interested in spreading the word, getting it out there that this is something that is real, and it is something that really took me by surprise. I thought that this could be something that was real in 5 or 10 years, and realizing that it is today makes me wonder how that may affect my understanding of where I think the price is going in 5 or 10 years. So that is why I'm so excited to share that. And one other thing before getting into the charts is my new favorite office decorating item, which is for those of you that can see, a genuine Sawcruteez slugger with the St. Louis Cardinals emblem on there. Just arrived courtesy of Fibbo Swanee. So I wanted to give a shout out to him for the excellent present that he sent my way. This is something I will absolutely cherish and have by my side for many years to come. So thank you very much.
It looks good, man. That looks awesome.
It really does. It is really cool. Something that is awfully special. So thank you very much.
Yeah,
And,
no, I enjoy it, man. It's awesome.
I appreciate it. So
yeah, it was fun. It was fun going to the. I actually bought that for you prior to you going to the museum when you were here. So it was kind of cool that you went and you enjoyed it. And I was. I'm glad that it turned out nice and it actually made it to you with the way the mail is going these days.
no doubt about that. So yeah, thank you very much. I really do appreciate that. So with all my blabbering being done, I'm sure that everybody is interested in getting into the charts, and I'm interested in sending it over to Joe to see what he is looking at. And with the markets moving, the order book can be a very more dynamic than really anything else, which means that it can potentially be more, it's not going to lag behind as much. It's not going to wait for price to move before the order book moves. Often the order book will make some moves before the price actually ends up responding. So with that being said, taking a look at what Joe's seeing in the order book will be a great way to start the show. And then if there's time, we will end by sending it back to him to see if anything has changed while we've been chatting. So how's it going over there, Joe?
Oh, excellent. Happy to be here. Thanks for having me. And just enjoying these couple days of nice weather. Isn't the Cardinals like a basketball team?
Nope, they got baseball and football, so yeah, you're close.
The Louisville Cardinals college here is the Cardinals, but he's the St. Louis Cardinals fan, so that's what that is.
All right. Baseball. Well,
not to be confused with the Stanford Cardinal, which is the color, not the bird.
Yeah, this is why I don't take sports bets. But anyways, yeah, let's talk about the short-term price action for a bit. If you wouldn't mind enabling screen share, I'll hit some signals and some stuff I got going on over here. I did take a long and stayed long, and all right, it looks like I'm good to go here. So here we go. I took a long over here where I got my first signal. And by the way, I don't know if you can tell, but Trader now has a rudimentary sequential built in now. So you can, of course, use that maybe on a 15-minute, 10-minute time scale, something like that. Maybe even daily, of course. But anyways, took some action, played it out. I was pretty confident that this was a bottomy territory, being that we really needed to sustain this above 10,100 area. I felt like that was a very, very important horizontal for us to defend. Might even be for a little further back. But anyways, we made a lower low over here, a pretty lower low. And anyways, we managed to defend it. We got close again in the low, even lower. Damn, this is actually scaring me now that I saw that. We've kind of double bottomed. I think this thing, I closed out my long position. So this is where I added leverage. I got in deep over here, dropped my average entry from 10,350 down to about 10,250 or something like that. And took every one of these signals, heavily leveraged in, near a 9 buy. We reject pretty quickly, and I just slept on this one, and we just, pumped out of it. So closed my position earlier today. There's about 3 impulses in this upside move so far, which is kind of a lot for short-term time stuff. You don't usually get 3 strong impulses like this without some sort of action to the downside. So I'm actually feeling pretty cozy if we manage to go back. But of course, the looming danger is the threat of a head inverse cup and handle forming here. So I'm kind of thinking about that in the background, this, classical kind of charting thing going on. Of course, a bullish engulfing candle off the 128-day moving average is a little bit of a setback to that overall picture. But I mean, I never need a perfect painting when it comes to a charting pattern in Bitcoin. And so just to put it all in perspective, I'm trading the signals. I'm trading them without bias. I'm sticking to my strongest ratios. So even though we did, I had plenty of options to get out of this trade over here that I took. I just chose to stay in this play because I chose to take the risk of assuming that this would be a strong support, which it was, at least in the short term. I'm now currently in no position, and I'm not eager to get in one. It's possible that we can go a bit higher and get a short signal. The high 10,000s, low 11,000s was definitely my price range, and we pretty much made it there. 10.8 is kind of the beginning of the high 10,000s to me. So I think we've made it high enough that if we were to pull back and continue painting that inverse head and shoulder cup and handle, my apologies, that this would be fine. But yeah, I think if Bitcoin doesn't hold, it's skipping the stone across the water with the lower high this time, which isn't good. So basically, why don't I pull up quickly? I'll pull up maybe probably a 2 hour would have looked a little nicer. But all right. So this is what scares me, is that I would really have loved for us to have had this bottom above this bottom to really, it has the look of a shakeout, might have the feel of a shakeout a little bit there, just to scare shake some hands a little bit. But I really don't like when we make a little snap low. It really messes with the overall picture, and it worries me a little bit about what we can do with this latest high. Hopefully we can keep this momentum, but this probably is close to a 9 on the 4 hour. I mean, if we go up a couple more candles and sideways a few, then we're probably looking walking into a 9 sell on the 4 hour. Yep. So yeah, I'm thinking that this has a little bit of pullback in it, and if we're lucky, a higher low, and then we can kick this thing back off into the 11-12K range.
All right. Yeah, thanks for sharing. A couple questions. Would be wondering what was your signal that you got to exit, and then it sounds like you're seeing potentially we could move up to the 11,000 to 11,200 from here, and that you're also thinking that would be a shorting opportunity. Is that correct?
Yeah. I would be looking to play both sides of that. So the first thing I look for when I'm exiting is going to be some important horizontal, so this was definitely important. And I always assume on Bitcoin breakouts that it's going to be a little more exaggerated. So I always throw my exits, a limit exit out somewhere above an unreasonable zone usually. So I had it up here somewhere. I'm not using token bot anymore, so I don't know the exact numbers, and I can't screenshot my trades anymore. But yeah, I got out during this pump, and I was actually okay with that. I was just a little upset. Could have made a little more money, but that's the curse of a good winning trade, right? You're always thinking about what you could have done to squeeze out an extra freaking 3% out of a freaking beautiful trade. So my exit was up in here. Like I said, it had a lot to do with this horizontal area, and that was pretty much it. I didn't want to trade signal to signal. I was happy taking leverage on, light leverage, and then stacking in deep. So that dropped my average entry. So I was much more willing to exit without a signal to signal type action. So yeah, I wouldn't say I have a great exit, a recurring exit strategy. It's probably one of five things, kind of one of five factors, and each one of them can cause a different exit. But if I was to be looking signal to signal, let me just take a quick look at danger and see if we actually did get signals up here. Interesting. Oh man.
What time frame is that?
5 minutes, same time frame, but just more sensitive signals. I mean, we got this. This is actually what I initially took the signals down here on. So we're actually probably pretty damn close to a short. This might. I think I got to take this short. I'm probably going to take it right now, actually. So I got to play this, man. Just looks too clean. Just a little bit. Capital preservation short here. Probably, like I said, 3 impulses in the course of a day. A little too heavy for Bitcoin. I think it's going to pull back to at least one of these horizontals.
Could you do me a favor and throw an RSI on there? I'm thinking there could be a bearish divergence, which may support what you're seeing.
I'm on a 5 minute. Yeah, we went over bot for a bit.
And
couple
now we've got
times.
the higher high on price, and the RSI did also make a higher high,
Ooh,
looks like.
I don't know, a little lower, a little bit of a divergence there.
Okay, yeah, I'm having trouble seeing the purple, but yeah, okay, it does look like there could be a divergence, which there we go. Perfect, yeah, so that does look like the divergence that I was kind of thinking would be there with that. When we get a higher high, but it's such a smaller higher high in relation to the last one, like the last one went from 10.3 to 10.7 on the higher high, and this one only goes from kind of like 10.6 to 10.8, barely creeps above. That's what makes me think that there's probably going to be an RSI divergence. So yeah, I could definitely see a little pullback from this smaller time frame, and interesting to see that you're potentially getting a short signal and also looking to jump on it. So I guess
Yeah,
thank you.
What's that RSI set at for a 5-minute chart?
the order is in the book, by the way. I'm taking this short.
What's your order at?
Yeah, I put my order in.
At what price?
10.736.
Nice. Good luck.
Yeah, I
Are
think the
you
book.
would you
So
double down if we took out the highs, or is this a spot where you just exit if we took out the highs?
I'm exiting with very light leverage. So what I said was this is going to be a capital preservation short. Basically, what I meant is extremely low leverage short, because I don't really want to be committed to any one direction or another right now. I'd rather be focused on money management, which is not trade of the year. Fortunately, I had a successful trade stacking heavy leverage down here because it was a really, really good signal. Right up here, it's not really this is a good signal, not a great signal. If we were to go a bit higher, then I would put myself maybe into a 10x. And if we were getting some of those SAS 2.5 signals on top of the danger signals. But yeah, right now I'm getting in, not filled yet, $2 away. But yeah, this is something that I'm interested in. This is about a ratio. This is pretty much the beginning of where I like to pay attention to positions. Red is a little bit dangerous. You usually want to exit at about 0.5% moves. It just depends on your time horizon, and it really should be the next candle. So 0.2 to 0.5% move or something like that is really good for danger signals, just repetitively flying in and out of positions. But over here, as you can see, we've moved out of red into more neutral colors. So that's how I designed it, was to make this say, all right, we're starting to enter less risky positions. So this is what I would be banking on to set this up, and to walk us out with signals is definitely a good sign.
Cool. Thank you very much. And yeah, we'll plan on checking back with you here before signing off to see if things are still looking the same, and if you got filled and everything like that. It's cool to be able to get the opportunity to take a position live on air. That's something that is not going to be too common when you do a show an hour a week, and you're having to sit around and wait for the signals for that to occur. Right here is that'll be fun to follow along. So thanks for sharing, and then also thanks for being so open with your positions. I think that can really help some people to get a feel for what it is like to trade themselves just by watching somebody else do it in real time. So thanks a lot for that, and let's go ahead and send it on over to Fibbo. See what the trend's looking like based on Fibonacci's.
All right, let's do that. The Joe was talking about the 4 hours, so I'm going to pop up with this first. I'm kind of in agreement that the 4 hours come into a little bit of a place for some resistance and some selling interest. One of the things, I didn't take any trades on this 4 hour. I was getting a lot of people asking me when it was making this low right around here, around 10.1. Once we broke this threshold right here at this point, when we went into this bearish zone down here, we made that first low, and then popped up, and then made another low. I call it a slight divergence because the price made a new low here, but you're talking like 10.18 to 10.15. It was pretty close, but it did make a new low, and there was a really, really slight divergence on the actual RSI itself. Nothing that I would trade off of, but people were asking me if I was seeing any bullish signals, and I said, well, that's about the only one I see. The other thing I saw was the threshold back here on the 4 hour when you move up to the top here, and then you work your way down to the 100%. Actually, this is off a little bit. Let's get that right here. The uh, the 38.2 is here. It's 61.8%. I'm looking at the blue right now. The 100% was the start of this threshold, and that was right around 10.3. But another thing was the extensions, since it made new lows from here into this point. I look at the extensions off of where the threshold started, and the 127 to 144 was in the 10K to 10.1 range, and the price was, excuse me, the price was moving down into that range. Not that first time, but the second time. So the real slight divergence and the touch of the extension was the only thing I saw bullish, or kind of bullish at the time. I definitely didn't trade that because I'm actually waiting for daily signals, and I'll show you that here in a minute. But if anybody did buy off of this, it was definitely a nice move to the upside. Joe had some good signals. You were actually getting some signals down there before that thing started to launch up to the upside, which was a good deal. But the thing that we're looking at now is this move to the upside, and it created a new threshold possibility. I put the line in here because the RSI has just moved up into the bull zone on the 4-hour. However, I really don't like the way it's looking. For one main reason is since the price was moving up, this is a 4-hour, so over the last couple of days here, the positive directional index, of course, is going to move up because price is moving up. But the whole time that the price is moving up, the ADX is decreasing. So the decreasing period over period, when it comes to the break to the upside here, is not a really good signal. So my models wouldn't really give us a signal there that says, hey, this is breaking out a threshold. But I am marking it just in case, because I'm actually watching the 61.8% level off of this latest move right here. And of course we got the 55 exponential moving average in here. So if we get another close in here, and the ADX starts to turn as we go to the upside, then I might get excited there. And the reason that I'm just not liking it at the moment. And here's one of the reasons why. When you look back at the last time there was a bull zone break right here, and it broke to the upside, as you can see, it went up and then it actually came back down and made some new lows, but it stayed inside the bull zone. One of the things that when this happened was that the ADX was really low and it wasn't really giving us a lot of momentum. This one's kind of showing some falling momentum, so the signal's not all that great. So what happens is, if you take there's a couple of things you can look at. One, if you take a fib at this break right here, up to the top at that point. Whoop, let me move that up a little bit. As it made a new low, it broke right down into the 127 to 141 range. So this right here is really where a buy signal could start to come in, because the bull zone was staying intact as the price was coming down. So that right there is a signal that, hey, this might actually turn out to be moving to the upside. Given that the threshold for me actually came as it popped back up again for the second time. So I would actually move this line over to here. But in this case, this is right where it started. So really the breakout point right here is relatively the same. So the fibs are the same going forward. If you start from there, or you start from here, it's still the same 100% level of when it happened. So there wasn't a big difference right there. The only difference is that this popped up, but really didn't give us a good 3-day close above the moving average, and then it started to pop down, but it stayed in the bull zone. That's what I'm concerned with at this point. Is if we break up into this area, right now you'd want to take the fib off of where the break point is, or actually the start of it, and you're looking at about right there up to where we're at the current time. The 38.2 is right here. The 61.8% is here. So if this back here, if comes up and it pops back down, if you get a nice sell off, if this same kind of scenario happens here because the momentum is just not there yet, and this drops down, we can drop back down into that 10-3 zone. And then hopefully it stays in the bull zone, just like it did back in here. And then maybe it'll start to take off, or it just starts to take off and we get some momentum behind it. But just yet, I don't see that. So I'm kind of with Joe on this one, where I feel like there should be some selling interest at this point, because we're just not getting the momentum that I'd like to see off of this. Now, if we get a couple more closes above the 61.8% here, above 10.6 over the next 8 hours, and then we start to see a positive rate of change on the ADX, then I would probably say, okay, maybe it's time to consider a short-term buy. But of course, I missed this because I just didn't have enough bull signals to get anything. So I'm with Joe on this one. I see a little bit of selling interest, and probably break down into 10.3, and then hopefully take off from there is kind of what I'm looking at here for the 4 hours. So
And something jumping out at me there is that looks like a big confluence of resistance from the current 0.618 that you have drawn, that's in line with the prior 0.618 that you had drawn, with the moving averages approaching and incoming. And on some of the prior shows, we had talked about price pulling back and into a crossover with a moving average and a fib level, and that potentially being a buying opportunity when price breaks through a fib level to the upside, then pulls back and into a crossover with that.
Yep.
And
you're talking about this line right here, right? This whole confluence here.
Exactly, with those moving averages rolling over and coming in. That's to me, just seeing 0.618 as resistance is one thing I'd pay attention to, but seeing two and also moving averages that are rolled over and coming in line is definitely jumping out at me as a confluence, as opposed to just one area.
Yeah, no, I'm with you. The only thing I'm going to do is I'm going to wait a couple more periods to see if this continues to close above it, because if that happens, then maybe we can get some signals on the internals. But I'm with you. I mean, a lot of people might be buying this to front run it, because it definitely is a good sign that we're getting back above that, because it definitely was support here. And now, it was support, broke down, was resistance. Now it's broke up. That's a big deal. But just for me and my models, I just need a little bit more conservative, internals telling me, hey, this is a go. And right now I haven't really been waiting for a 4-hour signal, but that would be one of them I'm looking for, is 3 closes above the 61.8%. We stay in the green zone here, and we get a confirmation on the ADX. So no, it's good point that those two 61.8% levels are pretty important. So yeah, good eye there, Saw. Good eye, Saw. Flipping over to the daily, this is the one I've been waiting on, and I'm calling this whole area in here the liminal space. And the reason for that is you look at two different fib levels here. We got the red fibs here on the break of this threshold to the downside, and you got the 38.2% right here at 10.6, and then you got the 61.8% level at 11.1. Price went up, hit this point, held here and sold off, and worked its way back down to the downside. But then when you take the low from here and work your way up on this leg, the 38.2% is at 10.6, and then the next one down here is at 10.3, and then you got these two trend lines that kind of create this triangle pattern that kind of, as price continues to coil in here to the, toward the apex of this triangle. To me, this is liminal space, because right now, we're sideways, when you look at the triangle pattern, but the internals are showing that the bears still control trend, and then we're still in the bear zone. So as price is coming up here, we're hitting some of these moving averages. We're testing this 38.2% level. We got a couple things in here that I'm not sold that this thing's ready to take off on a nice bull trend. So I'm really waiting on the daily signal to give us a break out of this, basically to the upside, by getting a signal here and getting us out of this bear zone on the daily. So with this move up right here, I could totally see this thing working its way back down to the trend line, which is going to be close to that 10.3 that we kind of talked about on the 4-hour here. If this let me see if I pull that back up, but the fib level off of this move right here, if it does go all the way back down to the 100% and into the extension, that's right around that 10.3. So I could see if we get the same kind of scenario that we saw back here, where it did break into a threshold, but it kind of give us a little head fake and kind of knock some people out, but it stayed bullish. And then that's what I'm kind of hoping to see here. So if that's the case, then the daily will hold this trend line right around in here, and hopefully get some buying interest, push this thing up, and start changing some of these internals to give us a little bit more of a bullish look. So for me, it's liminal space. I've been kind of quiet and just waiting, because we're just kind of hammering back and forth in here, just waiting for a trend. Because right now the overall trend's to the downside, and I gotta mitigate that risk, because this thing could break down to that 9,100 or so if it breaks this trend line to the downside. And as long as the internals are still showing the bearishness, I'm gonna be hesitant to really get any more long-term buys in at this point. So I'm still sitting in limbo, or I guess you could call liminal space, where I'm just kind of waiting for that threshold to go from one spot to the next. And right now it's not happening. So I'm still kicking back. So everybody that's been following me is probably going, man, Swanee's boring. He's like sitting back doing nothing. I didn't have enough on the 4 hour. I would have bought and traded, but I didn't have enough. So congrats, Joe, on a nice trade. You got some good signals there. I just didn't see anything, and I kind of missed out on that one.
To be honest, it's been hell trading lately. To be honest, I'm not.
Yeah.
I was ready.
You got some good signals though, and that's the good thing. I didn't get shit, so there wasn't enough for me to get in. So I kind of missed that nice little run up.
Yeah.
But I hear you. So right now I'm just sitting in this possible downside is what I'm a little bit nervous about. But hopefully we're getting to a point where we start to break that and get this thing kind of turned around. Hopefully.
Yeah, I'm in the trade, by the way.
What else?
I'm in the trade, by the way. I'm short, and I'm going to get out of this above break even. I can tell you that.
All right. Well, hopefully it comes down.
Ooh, nice.
Right to 10.3, and we get you a nice little profit. The one thing that was brought up to me a couple times from a couple different people this week, and I wanted to throw it at you guys and see what you thought. One of the things that we could see a possible more downside move in BTC is the actual dollar itself. There's been a breakout on the DXY on the dollar index going to the upside. It had a nice little threshold break here, moved up into the bull zone, got some momentum behind it, broke a trend line. I have a minimum target of about 95.70 or so. The 38.2% level off these thresholds right now is around 95.04. So I got a little bit of a risk up into this point. So to me, I wanted to throw it by you guys. Wouldn't this kind of work if this is going to move to the upside here? It could possibly put some pressure on BTC to the downside, or no? Am I thinking of it wrong? What do you guys think there?
I think it's a really good question, and it's something that I can't really I've never think about myself, because I just don't know. There's so many. I think there's a lot of good arguments for a lot of things, and potentially this could be very bullish for Bitcoin. If we're thinking that, where's the most demand for Bitcoin in the world, it's people with third world currencies or countries that are going through some sort of hyperinflation. That's where we're seeing the most demand in the world, is in a place like South Africa or Venezuela. So therefore, if their currency was very strong against the US dollar, you could argue that they would not be gaining as much BTC adoption, and that when the currencies deflate against the US dollar, that maybe US people that have US dollars, it'll be bearish for them, and they won't be as incentivized to put it into Bitcoin. But if everywhere else around the world is looking at their value of their savings declining and looking, then they might be wanting to look into the alternatives and kind of come across Bitcoin at that time. So I'm kind of the opinion that maybe it's a bullish thing, and we could just look back at let's look back at what did the DXY do since 2017 over like the last 3 years. It's been mostly in a downtrend and basically flat, but as Bitcoin's been in a big bear market, we haven't seen the US dollar really trending up. So maybe there is definitely that correlation there, but and it's something that maybe looking into more would be a good idea, because it looks like maybe it bottomed last time right around when Bitcoin got a big, massive run up towards the end of 2018. So yeah, it's a great question, something to look into more. And I think
no, I was just looking into it, and I thought it was kind of interesting because everything's kind of lining up here. Because you take this fib here off of this latest move, and it brought it right down into the reversal zone off of this. So this whole move down here broke right into the reversal zone here, and started to the upside, and now it's kind of getting some momentum behind it, broke into the bullish zone. So if it is something that's bullish for Bitcoin as this increases, it's something I'll have to look into a little deeper. Then this move to the upside could be a nice impetus to get us, kind of pushing, kind of getting this 4-hour crank in, and then hopefully getting out of this bear zone for the daily. So maybe you're right, and this bottom right here on BTC is timing the same as the bottom on the DXY, and we're moving to the upside now, because this low right here is on September 4th. We got the daily right here, basically a few days before, and they're both making lows at the same time, and this one's breaking a threshold on the daily, but the BTC daily just isn't there yet. But if this one breaks as the dollar's breaking, then maybe that is a signal that they're going to work together. I don't know. It would be interesting. But it was something I just started to look at, so that's why I kind of threw it out there. Maybe others will that are watching. If you see anything or learning anything from it, text us. Get to us and let us know if you see anything.
Absolutely. I appreciate you bringing that up. And what would be super interesting is potentially if the DXY is leading Bitcoin, and that would be a huge leap to make at this point, but it would be something to keep an eye on at this point, that if we see 3 times in a row where the DXY breaks the threshold and then Bitcoin follows, well, now we might be able to really start to use that. So I guess the other thing that's coming to mind is that I think we do potentially have some decent precedents for this idea, in that if we look at what happened with the DXY relative to gold in 2008, when the US prints a bunch of money, and then the US dollar gains value over every other currency in the rest of the world, but it was not bearish for gold even a little bit. Gold then went on to a big parabolic run up. So potentially that would be some precedents to point to say that, what happened with the DXY and gold in 2008 could be happening again right now with gold. And potentially now that we have Bitcoin as well. So something to definitely keep in mind. And anybody out there that has any thoughts, please reach out. Let us know what you're seeing, what you're thinking. We're just kind of trying to noodle through this ourselves. And
my to-do list is I'm going to go back and look at the thresholds that I have on BTC and DXY, and kind of see if they correlate over the last 5-10 years. I'm going to go back and look. I haven't had time to do that, but that's on my to-do list this week. So if I find anything with that, I will definitely show you the results if there's anything there. And of course, if there's not anything there, I'll show you that too. but I gotta go back and do that analysis. I haven't had time to do it, but that's on my to-do list for sure.
Excellent. That sounds great. So anything else to share, or is that?
No, I mean, the only other thing is I'm keeping an eye on this weekly, which I think is a really good sign long term. I just been waiting for the daily to give a nice signal. I like the way this is looking. It's staying well into the bull zone. Definitely long term bullish trend. This trend line since the threshold is holding. It's bounced off of it 1, 2, 3, 4, almost 5 times now, which is good. It's the 38.2% level that's held here. No 3 closes below. So long term, I think it's looking pretty good. So I just got to wait for a daily signal, because if the daily never signals, this could break, and then I'm screwed, from buying too much too early. But right now everything's looking pretty good. So just waiting on that daily and sitting in my liminal space, drinking my Coke.
You did bring up a couple of really good points that I wanted to be sure to touch on. That last week you had pointed out some signals on the 4-hour and said that here's where you could have been potentially entering, and here's where the exit would have been, and here's the re-entry. And I asked if you'd taken that, and the answer was no, and it's primarily because of you trading the daily chart. And this is a great example of how zooming in a little too much can cause you to get chopped around, whereas if you are to have a bit of a higher scope on the time frame, then you can potentially avoid that. And as Fibbo has been mentioning, not getting any signals and that being kind of boring, to me, that's the key of how he trades. And I've often said that the most important part of any system is the no trade zone, and being able to recognize when to stay out of the market. And every system, every person, every market is going to have this liminal space that really compels people to make mistakes, whether it be selling at the wrong time or overexposing or anything in between. And if you have the ability to just stay out of the market that whole time when it is chopping around and really causing a lot of anxiety for the rest of the market participants, you're just able to sit back, draw a couple lines, set a couple alerts, and drink your Coke and realize that, yeah, there is a signal here on the 4-hour chart, but I'm not taking it because I don't trade the 4-hour. And as we were doing the show last week, I believe that yeah, it would have been in a good spot. Like you were looking at, would have been able to buy low and sell high and then buy back lower, and having to look back and realize, man, I could have made some money here, but I didn't because I was sticking to a higher time frame. That can be very, very challenging. And I think that's one of basically the most important thing for the higher time frame swing and position trading is to, if you can effectively recognize when to just stay out of the market, then it becomes, then you can, basically that's what I focus on, is figuring out how to recognize when to stay out of the market, and when to enter the market will become much more obvious, and or just much better opportunities will present themselves if you're not trying to take every single one every single day, because you're lacking the patience required to just sit back and wait for a threshold to break. So I think that's potentially one of the biggest lessons that people can learn is just watching what you've been doing over the last couple of weeks.
I want to jump on that real quick because me and you have had some experiences trading together and stuff. And oh, Fibbo, you're still on screen share, by the way.
Oh, sorry.
So me and Sock, we've known each other. We traded a few times, had some fun, and I think it's always a good practice to trade little bits of money out of your comfort zone. So where I'm not much of a swing trader, I've made some great swings, and can't deny that. And I've had good month-and-a-half long trades where I added within $10 of like 5 out of the 7 dips that we had. It's, of course, had some success, but it's not my area of expertise. So sometimes I'll just put a little bit of money on a trading style that isn't very normal to me. And in this case, particularly as it pertains to time frames, I'll throw some money into that, and then, I think it's good also for some people to experience what it's like to trade small time scales, get in the fight, like in the pit, whatever you want to call it, but really watch the book and watch like the trade history, observe all the little, things that you would notice if you were at like a live concert, you know what I'm saying, versus listening to something on a CD. There's just such a palpable feeling of difference between small time scales and larger time scales.
I really appreciate you saying that, because yeah, that is something that we have talked about a lot, and an area where you disagree a little bit with my perspective, and I certainly appreciate where you're coming from, and really agree with everything that you just said. And the one thing that what you said that is so easy to say, but it just seems like almost nobody is able to actually do it, and that's to actually just take a small amount. to take a very, to take $10 or $100 and try something new is going to be night and day difference from feeling an itch and wanting to get into action, wanting to, you're on the sidelines and you're feeling that gambling itch and you just want to get in and you go against the system that you've been using for a significant amount of money. So I'm glad that you brought that up, because it's very, very important to clarify that it's one thing to take a small amount of money and invest that into a new system or a new time frame, and then to execute that religiously until you get an idea for how it's working and maybe where it can be approved. And that's something that I talk about time and time again, is that the best way to learn how to trade is to take a non-zero amount of money that is entirely nominal and put that to work on a smaller time frame. And that is exactly how I think you should go about getting in the volume, like Joe talked about. If you're trading for play money, you're not at the concert, you're not at the show, you're not feeling the vibes, the experience. You're listening to the music, but you're really not there and feeling it. And that's a really good analogy. So taking just $10, now when you lose, you actually feel that pain when you lose. That's what matters, and that's what it takes. So being able to take a small amount of money and stick to it and realize that it's not generating the gambling emotions that you're looking for. If you're able to do that, then that is going to be a tremendous way to either learn how to trade or to learn a new system. So yeah, thanks for bringing that up, and a really good analogy.
Can I rebuttal on that real quick?
Yes, please.
I'm not saying not to trade the 4 hour at all. My models just didn't have a signal, and I was kind of ticked that I didn't have a signal off my stuff. So if my time frame would have said to buy, I would have bought short term. Mm-hmm. But the plan that I'm in never gave me that signal. So I was actually kind of ticked that it didn't give me the signal, and I kind of missed out. So given that, the last week on the 4 hour, I did get a signal. I decided not to buy that because I was buying some other stuff at the time.
Oh, that's right.
And I wanted to, or I would have bought, and I would have traded it pretty well off of that 4 hour trade. But I had other things that I was putting in a little bit more near term. And this is a perfect example of what Joe is talking about, is I was taking some money into an altcoin that I don't normally get into. And I was trying something out on my own in a different technical type of thing where I was throwing money in it, but that money was in that versus what my 4 hour was. So I decided to actually take some money and throw it into a different system that I've been testing on some of the altcoins. So perfect example, Joe, and I'm with you. It's just that, and what Saul was saying was a perfect thing, is there's a big difference of throwing things just blindly at something just to do it versus, taking a little bit of money and trying new things. Like there's a difference there, I think. And you got to be really careful of just throwing money at something just to try it, to feel the gambling sensation and then to get your ass kicked, versus taking some money and trying new things. That's a whole different ball game. As long as you're using risk management tools when you're trying new things, placing stops, just being protective, those kind of things, instead of just nilly-willy throwing it. So I'm with you. I agree. I'm glad you brought that up.
I just don't think of it as gambling as much, I think, because, you guys know cards and stuff, and you guys came into this with much more of a gambling, I think, idea. Like I was a romantic when it came to trading. I didn't think of myself as a gambler until, much later on. So when I think, I just think, not in a gambling sense, not that I have that itch per se, but, but yeah, it's so funny, like the different perspectives.
How you think of it is sorry to interrupt, but I've learned a lot about how you think about it, because you have a different experience than myself, and you're a gamer, and you think about it like a gamer, which is going to be very beneficial with how you approach it, from what I've seen. In that, think about a gamer, and the game is trading, and the objective is to basically, retire from how much money you make. That's
annihilate opponents.
And to do that, you have to keep your lives. Like if you run out of money, then you're out of lives and you're out of the game, and that's it. So even though you didn't really come into it with a gambling perspective, you came into it with this perspective of, okay, I'm going to enter the game, I'm going to start a game, I'm ready player one, but I'm going to make sure that if I lose this game, I'm not completely done, that I'll have another life and I'll be able to come back and take another shot. And that's where so many people they're only focused on that end goal of making all the money in the world, and they're not thinking about maintaining their lives. And
I would call that the smart bomb. In all these like arcade games in Fibbo, you probably know what I'm talking about. You probably get one like, button that will clear the map and like kind of like let you get like all the little enemies spawning back up. And it's like, I call it the smart bomb, like you're not always waiting. You shouldn't expect every trade to be that anomaly where you need that, you should be trading like it's normal and hopefully be on the right side of the anomalies. But yeah, there's so many crossovers there, and it's just crazy. I think it's funny how you got into this and how I got into this, and it's just like everyone kind of Fibbo and his fucking magical numbers and shit that they figured out in the 1400s or whatever the fuck. Yeah, man. After you did that birds photo with the Fibbo thing, I like had this stupid ass spiritual Fibonacci fucking journey for like 3 days. It fucked me up. Yep. Fibbo, suck, you guys. I was just like, damn, I was driving and I was thinking about Fibonacci's driving. Like, oh my goodness, man. Oh my goodness.
Oh shit, that's awesome.
I was thinking it was like the key to the universe, and then like I thought like I figured something out for like 30 seconds, and then it went like things went back to normal. It was crazy.
You need to entertain those thoughts. I'm inclined to think it might be the key to the universe myself. It's been around a lot longer since the 1400s.
I know. I was just joking about his presentation and all that stuff. We've seen
at first I thought you said that I learned Fibonacci back in the 1400s.
I remember when you were posting the videos, the initial that first video we did, and I think you did it with maybe Sock and a couple others, where you have like the sequences and like there's various significance. So that was what I was kind of drawing back to. But I think man, I think we're so close as people tune into this and listen to these various opinions. I think we're very fucking close to like one hell of a combination of analyses here, and I've been thinking a lot about it. There's I was talking to Sock about my missing piece. There's something that I'm great at. I'm great at trading sideways markets. I got a 108% first place between like 91 and 9,300 in 7 days. But then when Bitcoin flips the fuck out, where was I? I was like, I got stopped out and I waited, and I could have been making money. So I think, we're all figuring these things out, and it's just been quite a journey.
Absolutely, and it's fascinating to see how it comes together. And I'm going to be pulling up some charts here in a moment, so we don't take too much longer than expected. But it's really interesting to see how we dump down and then go sideways. And Fibbo does nothing for weeks and draws the lines and says this is his liminal space where he's doing nothing. And while he's doing that, you're getting these great signals and entering.
No, and that's a good thing. I mean, because when you think about it, any model that's out there. Every model has a void.
Exactly.
Exactly. So you got to be able to fill a void somewhere, somehow. My void right now is I'm in a liminal space. I'm deciding to sit back. I could go and actually figure out some things if I dive into different time frames and looking at different analysis like Joe's showing. But this is just my long-term trade, and I've just been on it for a long time. So it's a personal thing that I'm just waiting. That doesn't mean that everybody and their brother has to wait in a liminal space. That's just everybody's liminal space is going to be different based on how you react during that time frame. I've decided to sit back. Other people might not decide to sit back. They might want to get some action while they're flipping back and forth in liminal space. And if that's the case, go to Joe and he'll give you a lot more closer signals that are whipsawing back and forth in a space that I'm just sitting back doing nothing. So yeah, there's a void everywhere. You just got to figure out where to fill them.
What I just kind of realized was that where our liminal space is the opposite for Joe, in that once the market starts really moving and making a big trend, now Joe's in his liminal space.
Until it gets to another area of consolidation.
Yeah.
Yep.
I'm just gonna do a little looky-loo on Sock's paper next time we're taking that test, and I'm gonna just dive in. I'm not gonna play the things I can't, but anyways, I know we want to get into Sock, and we've had a lot more of a casual time here than I think is customary.
And I like it. I prefer the casual times, and we can have fun ourselves, and
Yep.
people want to
Every
tune in,
once in a
so
while
be it.
it'll happen.
One thing I did want to mention, Febo, you mentioned that you're going to look into the correlation between Bitcoin and the DXY, and something that jumped out at me is that potentially the only correlation that would matter would be after the money printing was announced. That before the money printing, any correlation that was there wouldn't be relevant now, and that afterwards, any correlation that's been seen could be very relevant. So just wanted to mention that.
And that's one of the things I'll kind of keep in mind when I go back and look, if there is times that the thresholds were correlating, and then all of a sudden they weren't, that line in the sand, if that comes into play during a huge fundamental shift like what you're talking about, that'll make sense once I look at everything. But no, it's a good point. But let me see what kind of correlations there were, if any, and we'll go from there. And then we'll put the fundamental glasses on and see what was happening then. Because that makes sense.
Awesome. Yeah, I'll look forward to catching up with you once you get the chance to look into that further. So here is kind of just going to be the first threshold that I'm looking at. I'm always going to be deferring to EMASAR, but as he's talking, I couldn't help myself but to draw in this little line here, and the pattern that has me very interested that I pay attention to regularly would be a potential big W forming off of a trend line, where the traditional big W is going to be like a double bottom. Whereas if you have a big W off of a trend line, you get maybe a slightly higher low before revisiting up here, and then getting some sort of cup and handle type of situation.
Would you consider that W off of a key horizontal also?
100%.
Okay, I was wondering.
I would consider it more effective if it is off of a trend line. If we've got a horizontal with a double bottom, maybe let's just kind of try to illustrate that very quickly. So we have the horizontal and then the kind of double bottom here. When you're here, it's just like, maybe it's a bear flag and it's just kind of going to do a lower high before dumping. When it's a horizontal with this double bottom, the confirmation for the pattern doesn't happen until you break that. So it wouldn't be confirmed until here, but that's not where I'm interested in entering. Okay, I'm more interested in entering when we get some signals from moving averages kind of as this rolls up. I would expect the moving averages to do so and to get my signal down in here. And when it's a big W with a higher low and it's a bullish moving average trend, I'm going to feel much more comfortable than if it's just kind of a flat market with flat moving averages or potentially down moving averages. So yeah, good question. Thank you.
Yeah, that was good. I was curious about that.
I appreciate it. And if I would be able to push the delete button, that'd be great. All right. So yeah, would be looking for if we do break 11,175, it would give a target of 11,980, and that would confirm the big W. But like I said, I'm mostly interested in this pattern because of how well it lines up with moving averages. If it kind of doesn't do a V and more of a rounding, that's what I would be looking for there. So going to be definitely paying attention to that. I do have a couple fibs I'm looking at, but before diving into that, I do want to pull up EMASAR, see what she's saying, because it has been a very liminal space for me throughout it was funny, as I saw you draw your liminal zone, I think you kind of stopped it around here, and it was interesting how this whole space has absolutely been the liminal zone for myself, and I'll walk you guys through what I've been seeing, what I've been doing. Basically was buying when the trend turned bullish back down in here. And then I had this marker at 11.7 giving me a target. So I sold there, and then I bought back on my signal when price re-entered the beach. And when that happens there, we had this horizontal, and I'm thinking if we don't hold here, then I'm going to be wanting to exit what was bought here. So I bought back about 15%, excuse me, let me make it a little easier. Sold 15% here, bought it back here, stopped out here at a lower price. And then I got the signal to re-enter right in here as we exited the ocean, turned it into support, took out this high. Now I've got my signal to re-enter, and I didn't actually get filled until over in here. And then what ended up happening was I got stopped out on that right at the exact bottom. I mean, within pennies. 10,134 is where I was stopped out. And let's see what the low of the 15% of the position. So let's see, the low was 10,130 and I got stopped out at 10,134 of that. So that leaves me in a remainder of 85% of the position that was established down here. That is now got in a slightly worse cost basis. The cost basis was disimproved, made worse. What word am I looking for there? Cost basis it is now about 2% higher than it was due to the buying and selling that I've done in this kind of choppy, nightmarish range. And that's where I've definitely been, doing some selling and some buying, but, and I've been buying high and selling low, basically. So I sold high, bought low, but then sold lower, and then bought higher, sold lower, and was wrong, basically at each step of the way. Yet I am still in basically the same spot as if I just would have held what I bought in here. A small difference, but that's okay, because I was, primarily focusing on managing risk. As we were down in here, I was really, worried about the cost basis and managing risk more so than taking the entry signal that was on the table. And I had the stops right here as we broke through the ocean. Now my stops become the ocean. So I had my stops layered basically like this. And I'll always, go a little bit lower just in case we do something where you like this right here where you barely dip in. So this is where I had a cluster of stops set to where as we came down here and came very close to triggering that, but didn't, I'm starting to feel pretty darn good. And now we're staying on top of the ocean, and right at here, everything's looking real good. And then we get this head fake down that does trigger the first stop of 15% of my position to sell at a lower price than I bought, while maintaining the rest of the 85% of the position intact. And that's what I cared about the most, because we've all been there where we will sell, we go long at support, and then we sell on a what looks like a trap or whatever the case may be before the price immediately moves in our favor. And this is a prime example of why I will not generally have just one stop order set. A good way to kind of protect myself from that is to layer the stops down to where if we're, this is kind of my stop area, I could enter one stop, and if it gets triggered and we get wiped out, now I'm really not happy at all. If I get stopped out at the bottom and then price immediately reverses and I'm out of position, now I'm kind of, starting to FOMO a little bit. I'm out as price is moving up. I just sold at the worst price, and I'm, getting a little bit panicky and even more liminal than I have been all the way throughout here. Whereas now that I just have part of my position stopped out, I'm like fist pumping. I'm so happy that I didn't get the rest stopped out when it was within a whisker of just cascading down, and taking out all those. When price gets within $50 of really ripping through your stops, you start to think there's about a 0% chance that you're not going to get stopped out. So when you only get one of those triggered and filled, even when it's at the exact bottom, I'm feeling pretty darn happy myself, because I still have the majority of my exposure. And this was overall, my cost basis is around 95-ish. So even though I'm in effect buying the 15% high and selling it low, the reality is this was actually capitalizing on profit, because my average cost basis is much less than this. And that is why I was so important about worried about managing risk right here is if we really broke through that, now we're breaking down below my cost basis and putting me in a spot where I really have my hands tied and I'm not able to just kind of get wicked out and then say, hey, I made money there, so who cares? So especially because I've got exposure left on the table, and now I'm able to come in and try to re-enter again at a worse price, sell low and buy high, but that's fine with me, because when we take out this high right here, that tells me I probably got trapped, got wicked out or something along these lines. If we come down and have this little wick and then we get a bounce, it will start to feel like, okay, is it time to get back in? Was that a really bad time to sell? Yada, 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 like right in here. But if it just, continues to resist horizontally or create a lower high, that's where it can get very liminal again, where you get stopped out and then price moves against, and you don't know, is it just a little, like say this, you stopped out here, moves, and then comes back down, or is it actually going to keep moving? Very hard thing to try to determine, and that's why choppy zones are such a nightmare for myself, because I am looking for this thing to actually make a move through a threshold. I'm not looking for it to just ping pong back and forth. So now that we actually moved above this, it's telling me that, we're probably just going to continue chopping with lower lows and lower highs, or something along those lines, equal highs, equal lows, or this was the shakeout before the breakout. And seeing that we broke through this, now we're resisting the 200. I would absolutely be looking for that to turn into support. If that holds as resistance, that would tell me to expect more downside, but this should be support until it isn't. As it was resistance here until it wasn't, and it hasn't been retested yet. Therefore, 10.5.5, I think should hold even before the golden cross comes. And I would think that holding is what would potentially lead to a golden cross, and that's where I would be looking to buy, as the trend is still bullish based on EMASAR. So I am going to be looking at the 50 moving average, 10.6, that 10.55 horizontal, and that's where I will also then draw in some Fibonacci's. Let's see if I can make those a little bit brighter. I've decided to use Fibonacci numbers for all the shades in my in the colors, so I kind of like that idea. Thought you might as well, but here we go. So we have the buy zone on the Fibonacci retracement, kind of lining up right with what I was outlining there beforehand. The 50 is above, but here we see 10.4 to 10.540 is going to be the 0.618 to 0.312 retracement. That would be the buy zone, which is lining up with this horizontal right here. So I am kind of seeing what you guys were seeing at the top in terms of, it seems like we should be moving down from here. There's a big confluence of resistance, but I'm not expecting it to move too far. I think that move down to the 10.4.5 area would potentially be a good buying opportunity, and look at a couple of areas where that might be confirmed on a lower time frame. Just a quick look at the hourly. As EMASAR is loading up, it has also been respecting the important areas, but indicating continued range. So basically, we get this bullish reversal. The trend turns bullish, beach below the price, but the price is below this horizontal. That means it's an unconfirmed reversal. When you reverse the trend, but you fail to push through this horizontal, it's an unconfirmed trend, which indicates a range. And the range is indicated between the buoy and the marker right here and right here. Oh, I don't know what in the heck that was. Oh, maybe a rectangle or something. Let's do a box. Okay, so here's our new marker, and here is the buoy right here when the range reversed. So this 1 hour chart would be signaling a potential range between 11 and 10.3, which was interesting to see that Joe would potentially be thinking that he might be getting some signals to sell up around 11. That would definitely be in line with this resistance cluster that we have here on EMASAR. And the other thing that was a big help in here was this sky squeeze coming in, where when you get the sky approaching the beach to where it gets so close it can almost touch it, it really indicates a time when the price should revisit the sky. And that we have found to be a very powerful signal, one that I didn't have any intention of that putting this together, but it's just kind of a side effect of just taking a look back at when the sky gets really close to the beach and the price is down here by the buoy. It indicates a really high pressure situation where there should be some sort of pop back up to the sky. Or if it's a bear trend and you're up here resisting the buoy and you get this sky squeeze and then you pop back down into the sky there. Same thing was happening on the 4-hour as I was visiting Fibbo and really worried about getting stopped out in here. We have price supporting the buoy and the sky incoming with a squeeze to the beach, indicating that we should get some pop back up above there. So that is something that the 1 hour was showing back in there. Now that's done. Now that it makes this move back up here, the sky squeeze has done its job. The sky squeeze signals a move back up to here. It doesn't tell us anything afterwards. And that's where I would be paying attention to the moving averages to see, are we going to pop but then resist the moving average, or maybe pop right through and turn it into support and pull back and into a golden cross. And it looks like maybe the latter is playing out. So I do want to look at a higher time frame fib before sending it on back to Joe and closing up the show. So my fib right now is drawn using this breakout point here and this high here. And I did recently send Fibbo my rules for how I've been using fibs, and I'm really excited to hear what he has to say. But essentially, I'm connecting it from this point to this point and excluding this point because I view this as just not a real natural move, more of just a head fake, a trap that isn't really the natural movement of the market. And I quantify that by when a new high exceeds the local high but fails to get to 1.272. So for example, we would have had it from here to here. You break out, you create this new high, and it reaches 1.272. So to me, that's an actual move, an actual progression, not just some sort of balk or head fake. So now here we extend it, but we don't reach it anywhere close here, so it just stays flat. So that is why I would have the fibs drawn this way, and it was providing me with some really, really good confirmation for my stops and for what I was seeing out of EMASAR, in that I am looking for the 4-hour, actually. I'm looking for the moving average crossover relative to the fib levels, and it's something we've started talking about on this show. Right here is a good example where you break through, you really kind of extend from this 0.382 and the moving average is below, and then you get that pull back and into the golden cross, with that being a support threshold. And then notice how right here it was kind of trying to do the inverse of price falls below and it pulling back up and into, but it fails to get the crossover and it maintains. So that would have been something that would have stopped me out, is this moving average crossing this fib right here didn't happen. And instead, we were able to get back above there, but we resisted the 0.618, which was the dead cat bounce zone that we were looking at, I think, last week. So now I'm going to be paying attention to see here, this 50 and 200, as the 200 has crossed the 0.382. If that now holds as resistance and leads to a breakdown here, that's what would tell me the trend is actually bearish. And for me right now, the trend is flat and sideways as long as the 50 EMA is above the 618 and the price is below 12.1, there's basically no trend, or the trend would still be bullish for me because EMASAR is still in a bullish posture there. So definitely a spot where there's a lot going on, and I think it's very significant that this pop did get back above the prior horizontal. That is the confirmation to me that it was a trap and it wasn't just another little move up before moving down. Of course, we could end up getting, let me get a couple lines off the chart. Last thing I wanted to just kind of point out when I see action like this, the first thing that comes to mind, the kind of the worst pattern for a swing trader is going to be some sort of broadening pattern where you create higher highs and higher lows. That's about as nightmarish as it gets, much worse than equal highs and equal lows, if you ask me. So when we get a lower low and a higher high, I start to become on guard for a broadening pattern. And that's where, even though we did take out this high, I'm not thinking that it's a broadening structure because it extended. I mean, even if we use the wick to wick, like there's no way to extend this higher. So if we were resisting right in here, now I'm really starting to worry about some sort of broadening pattern that would take us back down to 10,000 or even below. But when we take out this high and we take out the highest possible trend line that could be drawn for the broadening pattern, that's what tells me that this right here was likely to be just a trap, and that the following 0.618 to 382 would be a good opportunity to go ahead and buy using this as our stop. If this really was a trap, then price should never revisit it, not even on a wick. If it does, then it wasn't a trap, and therefore that would be a good level for me to set a stop loss. And just taking a quick look at the risk, say you have an average entry in the middle of that, you know, looking at something like a 4 to 5% risk in Bitcoin with a stop loss that I feel like is you know, reasonable. It's not just filled with nothing but hope, is a situation where I think the risk reward should be very good for longs down in here, whereas the risk reward for shorts should be really good up around 11,000. So that is the pretty much recipe for a range when and therefore it's a spot where I want to be very, very careful about buying after price moves up, and paying very close attention to those range boundaries. And that is basically everything that I was hoping to share. We have gone on a little bit long, and I know Fibbo's had a long week. Is there anything you're seeing in the order book, Joe, that is changing anything you saw originally?
I'm kind of with you for the pullback. I will say that my long averaged out to a long from 10,250-ish or whatever. And I got, when I exited, I could tell you every once in a while you get that feeling where you exited a trade and you're like, you know, this is probably one of those trades I should have let it ride. And so that's kind of what I'm hoping for. I've made about 3 trades while you were talking. All of them were good. So now I'm just in a little bit of a low leverage short just to, you know, just to clean it up in case we move up. I'm in the money. I'm just going to play this how it is. You know, we're probably going to pull back down because I think 10.5 is probably a realistic pullback target from here. Those 3 strong impulses to the upside in quick succession. It's just, there's always someone that comes in and fucks with something like that. It builds up too much hope. But you know me, I trade, I trade on feels a lot of the time. And this late at night, maybe I'm trading more on feels than normal. But yeah, I'm just watching this play out, and I'm thinking, yeah, it's probably going to jangle here, but probably have a little bit of an upward trend up until the 11K, 11.2 range. That's kind of what I'm seing right now.
What'd you call it? Jingo Jango?
Jingle jangle.
Okay, that's not bad. I like my stop, chop, and roll. What do you guys think about that?
That was funny. Oh, that was great. I was like, wow, man.
Stop, chop, and roll.
All right. Well, yeah, it's been a pleasure as always. Thank you, guys, for joining and sharing your honest analysis. And it's great to be able to get the chance to do a show when Joe's also getting some signals. So just to clarify, the original short that you entered, that was already exited, and you've exited a couple other positions as well.
Yeah. Now I'm sitting in one more with 7x exposure, and you know, just small trades of this will, if I close this out right now, I'll be in the money, and this will be my fourth close since I said early in the episode that I was going to start taking these.
Awesome. And one last question to ask, because I'm sure a lot of fans may be wondering, with making that many trades in such a short amount of time, how the fees would impact the profit and loss. Are you on an exchange where you're using limit orders and actually getting paid fees, or is the market moving
Yes.
up to account for that?
I never market order. Very rarely do I market order. I will market order about 1 to 5% of my trades. And that could very simply be because I have a strong signal and I absolutely want some exposure to the market, and it's worth incurring 0.0, you know, 5 or whatever, 0.075% for that one entry. And then, you know, I'll take it out on the limit side on the exit. So I almost always limit order my entries and exits. So that actually gives me a rebate on both ends of the trade. So that's a 0.005% extra profit that I'm walking away from. And you know, it's just whatever. You don't really think about that much. But yeah, you don't want to be running through fees. You don't want fees to turn your 1 Bitcoin into 0.9 Bitcoin after you've made 10 profitable market orders.
That's for sure. That's what I was wanting to clarify, is that potentially on the right exchange and using the right order type, you can make something like 0.05, 0.04% on your position if you just enter and exit at the exact same price. So that's something that is very uncommon for anything outside of crypto and anything outside of some specific exchanges, such as Bybit, which there will be a link down below for anybody interested in learning more about trading and getting paid for your orders. So thank you, Joe, for keeping us updated on that. Any last words from Fibbo Swanee?
No, everything good on my end. I like the reflection in the window. I think it's badass. I got the peace symbol on my one computer. See it back there? But yeah. I'm just messing. No, it was good. The last thing you talked about with the broadening pattern was very good. That was something I wasn't looking at, and I'm gonna dig into that some more, because that's actually something to consider on that. So thanks for
glad to hear it. And
so,
yeah, you got me thinking that we need to invent some sort of like electronic stained glass window, to where you have a projector that projects that image onto your window, and it looks like stained glass. Like that is cool. It looks great. Imagine if it was the whole window, you know, fitted well.
Yeah, true. Yep. I got my bat out, but you know, they say size matters. Mine's a little small.
I guess. Yeah, you might be able to bruise a shin.
At least you have one.
I was gonna say one thing, Fibbo. Do you have like one of each monitor size?
I got a whole bunch of monitors, dude.
You look like you're dealing with like 27s, fucking double wide.
I have 7.
Damn, dog, that's like swordfish. I only got 5.
I only got 4. I guess number matters. Size matters more than numbers.
Yo, I got 2 43s, baby, 4K.
Oh, very nice. I can't wait to get out and see your setup, and hopefully you'll be able to come out and check out my spot here sooner rather than later. And
I almost cannonballed out there yesterday, man. I almost cannonballed.
If you leave now, you could get there by 4 o'clock tomorrow.
I could get there in the morning.
All right. Well, yeah, I'll be around to chat afterwards if you guys are, and I'm sure that everybody is now tuning right out. So we'll go ahead and end the stream, and thank everybody for sticking around. And thanks to Fibbo again for my most special.
That's pretty boss. I'm glad it turned out good.
It turned out great. So
did I design okay?
Oh, absolutely crushed it. That is beautiful. So now if I can figure out where my dang screen went to. There it is. All right. I will be ending the stream now. And thanks again for everybody for tuning in. We will be back at you every Friday, every Thursday at 7:30 Eastern Standard Time for the Honest Analysts live stream. And just noticing that there was $20 in tips that I didn't see. So hope I didn't miss any questions. Doesn't look like a question. Thank you, Kimo Zabi, for the contribution. That is
awesome.
Appreciated. So yeah, that'll. I mean, that almost gets like what, like a 12-pack of Coors Light. I mean, that's awesome. I'll be in business. So thank you very much, and thank everybody else for tuning in. We'll catch up with you next time.
All right, later all.
Peace.